Welcome back to another episode of What's on Your Mind. On this episode, I've got David Perlin and Chris Cathey joining me on the show, who are both senior trading mentors at the Institute of Trading and Portfolio Management. They also both happen to be former traders for Goldman Sachs as well, so I'm really looking forward to getting their perspective on the markets currently. But just before we kick off the conversation, I want to remind you guys that if you want to see more of our content, you can head over to our website itpm.com, where we've got lots of different things available to you. So things like our bite-sized videos, our online trading courses. We've also got information on our live upcoming seminars that we do around the world, and information on our mentoring programs as well, which are with guys like David and Chris here. Now, there's two things I want to point out in particularly to you guys just before we begin. The first of which is that we've got a London Super Conference event coming up on the 15th of June. It's the only Super Conference event that we'll be doing this year. It's essentially a full day of presentations from all the senior trading mentors that you see on this What's on Your Mind series, plus a couple from Anton, myself, and this time a special mystery guest speaker as well, who we're yet to announce. Now, once we announce who this mystery guest speaker is, guys, the tickets are going to sell out so quickly. So I can't recommend strongly enough that you get your tickets before we actually do that, to avoid any disappointment. The second thing I wanted to point out to you guys is that if you're interested in doing a mentoring program with us, then you'll be pleased to know that we've just opened our applications for our Thailand vacation mentoring program in October. Essentially, our vacation mentoring programs combine a mix of classroom sessions, one-on-one time with the mentors, and some downtime, of course, as well. Plus, you get to go through the whole initial stages of that mentoring process with other students that you can bounce ideas off of and help each other learn more efficiently. So it's a great way to start your mentoring program. So I'll put links below the video to give you guys more information about that London Super Conference event and about our October Thailand vacation mentoring programs as well. But let's get started with our conversation now. I'm really interested to hear what these guys' perspectives on the markets are currently. So David, why don't we start with you this week? What's been on your mind?
Well, I just want to say hello to my dear old friend, Mr. Cathey.
Hi, Dave. Lovely to see you again, mate.
We were in the trenches together for many, many years.
Long time, yeah.
Long time.
It's good fun, though. Good fun.
Absolutely, no regrets.
Absolutely.
So we're gonna do a little bit more granular conversation this week, specifically on some long-short ideas. And it won't be shocking to anybody that Chris and I have kind of a similar approach. We kind of grew up together in this business, and the market's a little toppy. This is about the sixth time the S&P has revisited the kind of low 2,800 levels, and has failed. This time it's a little higher. We'll see if it has enough energy to break out. Also, which Chris will talk a little bit more about, we've got a flat yield curve again, and what that means for Fed policy and indications for growth and perhaps recessions. So all of that's kind of bundled up. And as we saw yesterday in the U.S. markets, this U.S.-China trade deal is not a slam dunk, and the market's kind of discounting that it's largely done. So I think those are kind of the big overview tensions, but we're going to really dig into some ideas. What I like to start with are two kind of half positions. Sometimes when I'm thinking about going long something, and I'm looking at a sectoral or a news-oriented event, I might divide that bet among more than one or two stocks. In this case, I like the defense sector in general with the increasing U.S. defense budget. That's indisputable as long as Trump and others are in the White House and in the majority, largely in the Senate. The budget for the Defense Department is going to continue to go up. And then the secondary force that makes me excited is that the U.S.-Russian Intermediate Nuclear Force Treaty is about to expire, and that controls intermediate nuclear missiles, essentially. So that treaty is going to end. I already know by reading that the Russians are increasing missile production dramatically. I would expect the U.S. to respond in kind. That has always happened traditionally. So how do you take that news to an idea. There are two U.S. defense stocks that dominate the missile subsector, and that's Lockheed Martin and Raytheon. LMT, RT. Defense stocks are cheap relative to the rest of the market. They have lower beta. Missiles are about 15% of Lockheed Martin's production and revenues, and about 50%, half of Raytheon's production. So that's a good position in a market that seems toppy, but we're going to have news that has a long-standing leg to it, so to speak. It's going to be years of spending in these projects. So that's my kind of first salvo, so to speak. No military intent in that conversation.
Yeah, sounds good.
What do you, Chris?
What about you, Chris? What are you thinking on the long side?
Well, as Dave alluded to, I think it's just worthwhile just saying that the spread between the US government 2-year and the 10 years is around about 16 beeps, so that's pretty close to zero. Now, traditionally, this suggests that the bond market, the US government bond market, is pricing in a recession sometime within 12 to sort of maybe 18 months. Now, if that's the case, I think the way I'm looking to use that information is to be pretty much long defensives and short anything growth or anything cyclical. Typical defensive sectors that I'm looking at are consumer staples, healthcare, and real estate. And on the short side, I think there's three themes that I'm sort of working with. Are first of all, sectors that the numbers have already been downgraded because they're very, very early cyclicals. As Dave mentioned again, it's sort of the S&P sort of running out of steam. So that one of the sectors that have just been consistently seem to be stagnant is the US housing market. So maybe a couple of housing names, and finally, I think also the sort of more late cyclicals where the numbers haven't been downgraded yet, and there are potential downgrades to come some stage within over the next 6 months. Just kick it off. First of all, Dollar General, US retailer, reported numbers a couple of days ago. Slight disappointment. Stock dropped around 10%. It's rallied around about 80% of the drop, so only 2% down on the numbers. But it is worthwhile flagging that they are expecting second half of 2019 a sizable slowdown in the US economy. So that sort of kind of fits the narrative that the bond market's telling you. So I just want to start off sort of two potential longs in that space: Dollar General and Dollar Tree. Dollar Tree sort of discount stores, but I think about as consumer stable as you can get in the US. That would be two potential longs for me. Again, just to run you through very defensive names, you would perceive these to be quite dull and quite boring, and probably not getting a lot of airtime. But I think good solid companies that you can just sort of buy and hold against either sort of a long short portfolio, or potentially, given the volatility, the VIX is sort of still around the sort of like the lower teens, maybe just outright either QQQ puts or SPY puts. But I think a few names that I'm sort of looking at: Waste Management, boring sort of Texas company, bang line P sector, P valuation relative to the sector, steady 8% earnings growth. A name that you can just sort of buy and hold against either sort of the appropriate hedges or the appropriate shorts. Procter & Gamble, Estee Lauder, similar sort of names, and another boring one, Starbucks. These stocks all hit all-time highs over the last 2 weeks. A little bit of a pullback over the last few days, a bit of profit taking, but I think these sort of buy and hold names. They're sort of names to start off that I'll be looking for on the long side. How about you, Dave?
My other long is Visa. The payments giant kind of doesn't matter really what cycle in general. It's just been executing perfectly. And I think this is just on my recurring watch list. So anytime there's a risk off moment in the market, I want to start looking at certain stocks that I know have a kind of a defensible moat, and a business plan that's almost immune to kind of business activity or economic activity within reason. The other supporting kind of fact in Visa is payments M&A is picking up. So you've seen some very large acquisition M&A news in the last 2 months in the space. Kind of the more of the plumbing stocks behind the way payments work combined. And I just think that's a long-term support for what Visa does for a living and how well they do it. 465 in earnings, a PEG ratio of above 2, no debt. It's just a fantastic company. Really good leadership in the C-suite. And whenever I see risk off, I'm looking at Visa for an entry point. If one were to think about pairs, and we think about pairs a lot in the institute, maybe Square as a short player beta, but definitely more prone to, if in fact we do see some softening in the economy, it's more prone to hit Square than in Visa. And you've obviously got a much more expensive stock just on metrics. So put that out there.
It's funny you mentioned Square, because I mean Square's been a fantastic performer over the last few years. I mean, I know a lot of guys have sort of been working with it, been long that one. It's been an absolutely fantastic performer, but I agree completely. If there is any softness in the US economy, then that's going to get hit hard.
And if there's risk off in the market, it's going down a lot more than Visa.
Well, we just saw what happened in the sort of the final quarter last year. That's exactly the situation.
Exactly. This was another stock I actually looked in the buy side in December, but much more of a tactical trade, and Visa I would call a strategic long.
Yeah, I agree. There's different time frames, different horizons, isn't it?
Absolutely. It's very.
When you guys are talking about setting up pairs trades or relative value, so for example, Chris, you were talking about going long defensives as a sector versus cyclicals. I think it's important to point out to our viewers that doesn't necessarily mean you're net long or short the market, does it? It's more that you're talking about outperformance.
Oh, absolutely. This is not a directional view. This is basically a top-down approach, sort of looking at the leading indicators, looking at the state of the US economy and identifying where we want to be long or where we want to be short. Right here, right now, I think both Dave and I are on the sort of opinion that there was a reasonable risk that the S&P is kind of running out of steam, could go higher, but the US economy does seem to be, I wouldn't say it's slowing, but it does seem to appear the rate of growth is starting to slow down. If that's the case, generally you want to be long more names that are less exposed to the economic cycle, and short either basically short names which are sort of more geared towards the economic cycle. As Dave said, long Visa, short Square would be a potential trade in this environment. 2 years ago, probably not, because Square is much more exposed to the US economic cycle. It's going to have a bigger boost in its earnings, and that's why you want to be long. However, if we both have the opinion that potentially the US is starting to change a little bit, then maybe short growth and long or more defensive bias is the way to do that. Now, that doesn't mean you have to be long or short the market, long or short in a directional view. We're just looking where the outperformance and the underperformance will come through over the next 6 months. Remember that one of our starting points is that the US government bond market is the 2 and 10 year yield is pretty flat. So again, I want to flag that. That suggests that we're going to have some softening of the US economy over the next 12 to 18 months. Now, clearly, equities are a leading indicator, so they're going to move before the news actually hits the tape. So you're going to have to be positioned beforehand. That's what we're trying to get you to think, to sort of think what's going to happen, how do I want to be positioned right here, right now. Now, that doesn't mean you have to have a full position. As Dave said, half positions perfectly acceptable. That's the way I like to trade. Start a position and increase it when it starts to work. That doesn't mean you have to be fully invested long short at all times, nor does it mean that you have to have a directional view on the S&P. What I was saying about sort of maybe QQQ puts or SPY puts is that you're taking a protection on a long only portfolio if you can't find appropriate shorts. But a couple of shorts that I'm looking at, which I think have performed pretty well given the fact that what the S&P's done, is I think there's three sort of themes I'm looking for on the short side. First one is where the numbers have already been downgraded. Is there more to come? Three names which flagged for me are US Steel, Alcoa, International Paper. So very early cyclicals, very, very exposed to the economy. US Steel down to 25% earnings drop this year. Alcoa 24%, International Paper 9%. So the numbers have already been downgraded. But if there's further weakening in the US economy, these numbers are going to get cut again. So I still think that's a potential place to look for shorts. It does seem as though probably the next step to look at is where the earnings downgrades haven't hit. So maybe sort of slightly more sort of mid to late term cyclicals, which the numbers are still looking for growth this year. But a couple of names that flagged to me are Flowserve, mid-cyclical company, looking for 12% earnings growth. The point is, are those numbers liable to be cut? DuPont, again, sort of mid-cyclical, looking for 12% earnings growth this year, but potentially all those numbers looking to be cut. And I think the three car companies that I looked at were Ford, Chrysler, and Tesla. Now, I think Tesla is also a big favourite, but if you just look at the numbers, I mean, it's on P 43 this year, relative to the sector around about 6. That's over 930% earnings growth this year. Now, I know this stock's been a bit of a widowmaker because people are trying to short it. You can take a view on Elon Musk or whatever you want to say, but I think a P of 43 and earnings growth of 930%, that seems to me to be very, very vulnerable to some downgrades. So maybe Tesla will be on the short side. Forget about the sort of electric cars business, forget about Elon Musk, just simply on the numbers that are backing its valuation right here, right now.
I think some of those earlier stocks that you mentioned, Chris, so stocks such as US Steel, Alcoa, International Paper, they're all obviously related to certain commodities. And
yes.
So the value of the US dollar is also very important to those stocks.
Absolutely.
And speaking of the US dollar, David, you were talking about a position that you're thinking about before the call, which relates to the US dollar, which is a position in emerging markets. Do you want to expand a little bit on what you were thinking there?
Yes, EM. I've been looking at this ETF, which is the Emerging Markets ETF. It's very liquid and very well traded. If in fact we think the dollar is at least its ascent is beginning to slow a bit, that's beneficial to emerging market economies in general. A lot of them have dollar-denominated debt, so as the dollar falls, their debt costs go down as well. Also importantly, I like to look at what's trailing the rest of the world thus far. And with China having a robust bounce this year and the S&P, EEM, to me, looks like a relative value. So I'm doing some work, again, more of a tactical trade with a lot of technical analysis, but that's a nice way to tie kind of our view with what the market's telling us and what that might mean for the dollar as an expression.
Yeah, just worthwhile flagging out that I mean, the spread between the S&P and major markets it has moved a little bit, but it's pretty much close to all-time highs. I mean, so the risk reward, the hard part obviously about those kind of trades is sort of timing it, but it's definitely something that I would be looking to scale into the position. 100% agree with you, Dave. 100%.
What about on the short side for you, David? Do you have any equities you're looking at there?
I do. I have a long-term kind of, we'll call it a strategic short, and that name is Qualcomm. Qualcomm's a great company, but it's flat for the year, and a year that most chip stocks have gone up a lot. And essentially, I think what they're stuck with is that smartphone unit pressure is going to persist. We saw it with Apple earlier in the year. Even though the stock has rallied, there's no dispute that unit growth is slowing globally. A lot of people have smartphones, and the replacement cycle is starting to stretch. And these guys are the chips in smartphones, the communication chips largely. And I think the other thing that's really bothering investors is that they continue to fight with their biggest client. So lawsuits back and forth with Apple is probably not the best way to be, the trusted supplier. So we'll have to see how that shakes out. But I do believe on a relative basis, the stock will underperform chips in general. And I think you can stay short the stock in the tech portion of a portfolio. The other shorts I have while we're on that side of the trading book are more tactical. And I spoke a few sessions ago about this IPO cycle that's happening in America, where these tremendous private companies are starting to come public. Lyft is on the roadshow right now. Uber will soon follow. And the two stocks that I think are super vulnerable to the conversation around these IPOs and the way they compete with entrenched companies is Grubhub and Avis Budget, which is CAR. So GRUB, CAR. In my opinion, these roadshows show a couple of things. Both Lyft and Uber will alleviate the need to go to an airport, arrive in an airport and rent a car. You just order your car. So I think rental cars, which are, I forget the percentage, but airport rental is by far the biggest part of their business, and I think it's very vulnerable. And Grubhub, even though Uber Eats is a current competitor and an effective competitor, I think once they get financed with this IPO and unleash it and maybe spin it out one day, that it's a significant competitor that's really going to eat into Grubhub's, pun intended, growth rates. Those are my tactical shorts as we go through this IPO cycle. It highlights kind of new well-funded competitors in specific car and delivery space.
What about outside of equities, Chris? Have you been looking at any other asset classes, for example, currencies?
Actually, before just moving to currencies, I just want to just flag it, just a couple of things that sort of just I'll be looking at. I know we've had two names which would fit the sort of narrative right here about sort of potential longs would be Johnson & Johnson and Kraft. Now, I know Raj has mentioned Kraft last September in New York about on the short side because of the health eating trend in the US. But given the damage that's been done when they wrote down some of the Kraft and Oscar Mayer brands a couple of weeks ago, stock's down about 33%. I mean, it's a big move in a name like Kraft, which is potentially a name that you'd be looking to get long in a consumer stable defensive mindset. Just right here, right now, just looking at sort of pricing up some options. I mean, you can buy the October 35 calls at $1.40. I would say that's probably worth a punt. I mean, these are positions that you don't want to have no more than a half a position in. But sort of slightly out the money call for October and Kraft, I think your risk reward's quite in your favor right here, right now. And I think another one to sort of flag also in the same sort of defensive mode would be Johnson & Johnson. There's a story a few months ago about sort of asbestos and talcum powder. Stock's down about 20% from its highs. It started a rally, but still you can buy September 140 calls for around about $4. I think the risk reward is very much in your favor to be looking to buy, again, a half position in sort of slate out the money September, October, Johnson & Johnson and Kraft calls right here, right now. I know, Dave, you had one which similar sort of vein, so kind of a bit of a swing trade, sort of a reversal in sort of quality companies.
Yeah, I figured just give it a nice opportunity to talk about some of the swing trades that are starting to work for my mentees. We've done a couple of trades lately, and the Boeing is obviously in the news and well covered. I won't review the news except to say that for me is a very comfortable setup for a swing trade, which is great company, indisputable business model, and duopoly, and they're gonna fix this quickly, and customers can't go elsewhere. I.e., if you want a single aisle commercial airliner, you only have two places to go, and the waiting list is years. So you're not going to cancel an order. It's going to cost them a little bit of money to get this back on track, and they'll have to give the airlines some portion of plane cost back to get back into good stead. But I anticipate this to wrap up quickly, and I have shorted some puts as an example of using juiced volatility into a name that I think will have at least a 50 or 60% retracement in just a few weeks. And the other fun idea I had was I got this ridiculous catalog in the mail. Jesus. I think my mailman's asked for a tip to deliver this. This is the catalog from a company used to be called Restoration Hardware, and now it's called RH because they've gone upscale and they're very fancy. So RH used to have stores everywhere and a big catalog business and online business. And on the low end, Wayfair is kind of pushing them or crushing them. And then the high end, people still go to boutique stores, not to RH. And I think more importantly, a threat to them is the fact that high price homes, luxury homes in America, which are largely on the coasts and high tax states, are starting to peak. Prices are peaking and going down, and inventory in days to sell is a problem. So if I'm in a luxury home, I might be a client of these guys to buy my $5,000 settee, but if my value of my home is going down, I'm not buying it. I'm not going to redecorate, and I think they're going to get squeezed. And I think they've gone high end at the wrong time, and I think this trend is real, and it's a consequence of tax change in America. So I think that's a good opportunistic be long some puts in RH, and a very good tactical trade.
Makes sense. On the same sort of space, but slightly different, but in the sort of housing sector. So a couple of names which have sort of been great performers on the short side. Louisiana Pacific, LPX, and Bed Bath & Beyond. I mean, Bed Bath & Beyond has been an absolute toilet for years and continues to be so, and it's just a structural short. So I just in the same space. Actually, if you're looking at sort of longs against construction or I guess soft furnishing companies, I would say that maybe they've just reached themselves. A couple that flagged for me was NNN, National Retail Properties, and Store Capital, STOR, both yielding around about 4%. I think if we're correct on sort of potentially the US slowing down, that maybe yield will start to come back into vogue. These both yielding about 4% on an annualized basis. Maybe something worthwhile looking at pick up.
Great point.
And Chris, did you have anything else that you wanted to mention on the currency side, just to finish off the episode?
Well, yeah, I think not going to talk about Brexit, but I think over the last month there's been a big pickup in British pound volatility, as you'd expect. It's gone from around about 5 to around about 15 on an implied volatility basis. That's a big move in currency volatility, given the fact the rest of the world volatility in the currency markets is sort of around about sort of 4, 5, 6, which is kind of spectacularly low given the fact that we've got Brexit going on. So I just wonder, is the pound telling us something? Because historically, when we've seen pickup in any currency volatility, sort of Asian crisis 98, even over the last year or so, we had Argentina, we've had Turkey, we've had South Africa, pickup in currency volatility. 3 months later, we've got to pick up in equity volatility. So maybe the pound's a special situation, but it's worthwhile. It's a sort of just something to keep an eye on. I don't think you have to trade on it right here, right now, but it's just something to keep just be aware of.
Okay, well, I think we've run out of time for this episode of What's on Your Mind. It's been an absolute pleasure speaking to you both, David and Chris, and thanks for sharing your ideas again with us on What's on Your Mind. But just before I close the show, I want to remind you guys watching again to visit our website, itpm.com, to take advantage of all the resources we have up there. So that's things like our bite-sized videos, our online trading courses that teach you how to build and manage your own portfolios. You can check out the information that we have on live seminars and events that we're doing around the world. I know Chris, I think, has one on the 11th of April in Manchester coming up. We've also got information on our mentoring programs as well. And don't forget those 2 points that I mentioned to point out specifically at the beginning of the video. That was firstly the London Super Conference. Get your tickets for that quickly. It's selling out really quickly. It's going to sell out even faster once we announce who this mystery speaker is. And also, if you're interested in doing a mentoring program with us, remember we've got the Thailand mentoring programs, vacation mentoring programs for October now open, so you can check out those. I'll put links below the video for both of those things, but you can also check out more information on the website or send us a message through the contact form. So that's all from us in this episode of What's on Your Mind. I hope you guys enjoyed the show, and make sure you join us next time for another episode of What's on Your Mind.